Pause this. So it is Tuesday. Oh, I thought I had it. It is Tuesday, January 24th, 2023. At the just after the close, we had Microsoft earnings. I want to do two things today. First of all, if you want to get a hold of me on Twitter at RedBenTrader. If you want to learn more about the systematic process I use to find trades and decide whether or not I'm bullish or bearish and all that comes from the room I trade in that's run by my coach Simon. That's what you want to learn about. So if you want to learn more about the algo, contact my coach Simon, trade letter N word perform at gmail.com. If you just want to talk to me, you can see me on Twitter at RedBenTrader. Okay, so what I want to do today, that's all the extent of all the marketing I'll do. But what I want to do today is first of all go over the day and some of the new signals that I'm using and how they might work together with some old ideas. I've already got a couple hints, but I'm not 100% sure how to put everything together yet, but it's getting close. And then I also want to compare yesterday, because it was a trend day, to today, and show you how early on we could have gotten a hint that this wasn't a trend day, and we might have had a different strategy than yesterday, and I can show you where I identified that. I'm gonna apologize in advance that it's red flag warning here in Las Vegas, which means that the Air Force Base, it has training from all sorts of countries around the world, and Air Force bases from around the nation come here, and they all fly the fancy jets and helicopters and stuff. So it is noisy, and it's like this for about 22 hours a day for a week here, and then it settles down. Hold on real quick. If it gets noisy, I apologize. I can always try to mute it if it's really loud. I might recommend that you don't use headphones. So, all right. So first of all, I'm looking at NQ. When I trade, I've actually got multiple screens with different information on it, right? So on one screen, I'm looking at this. And on another screen, I'm looking at the algo to give me the execution trigger, and then I've got other screens with different time frames, and I've got everything you can imagine, right? I've got the footprint charts on another one, so I can keep an eye on this, right? So it's all there. So realize that I'm not, just because this is what you see doesn't mean that's necessarily what I'm always using to make to determine biases and stuff. But the reason I do most of my reviews and my learning journal with the algo is because the algo kind of has the power to visually represent things that everybody, most people kind of know what they look for in a trade, but you might not have a visual representation of when that condition exists. And so having that helps me see patterns. So all these little signals and colors and stuff like that, all it is just different conditions that are found in places like the footprint, the number bars, the limit order book, or could be possibly found on something like a candlestick chart or similar indicator. So it's just a easy way for me to display information so that I can process it more quickly and more consistently, so that I don't have to interpret. It looks like a lot, and it is, and I'm not using all of those signals all at once. I'm reading it kind of bar by bar and determining where I want to be looking for trades, and then once I know the location, I want to see if I can get a certain pattern to occur there, and that would get me set up for a trade setup. So it's not like you need to understand every single signal and what it means. You just need to learn some patterns. So yeah, that is the easy part. Honestly, the hard part is knowing when to use the patterns, and when to, because some patterns work really well, for instance, when there's lots of momentum, and other patterns work really well if there's if you're at a pivot point during a balance day. So, like I said, I'm going to talk a little bit about how to interpret that and how you might have a guess of which patterns, which techniques, which strategies you should be using based on the information we have. So, without further ado, let's start. Like I said, this is the NQ24 tick. When I'm trading on this screen, I've usually got the 24 tick to get me into my primary trades and do most of my assessment of what's going on, and then I have the 15 tick as a like a confirmation and an early warning system that there might be something changing. I particularly watch these indicators, the top one and the bottom one, not so much the MACD on the small. The MACD is more of a big picture, like I'm primarily, it's the MACD histogram but painted as a line, and I'm just looking for divergence there. It's probably the least used piece of the puzzle, and I honestly could live without it if I had to, but for now I'm leaving it on the chart. I don't need it very large. And then the things that are new, well, first of all, they're Renko bars, so hopefully everyone knows how Renko works. If there's a wick on the bottom and that means there's a close on the top, so that's a bullish bar regardless of what color it is. So this is bullish, this is bullish, this is bullish, this is bullish, this is bullish. Bullish bars will all have closes at the highs. The bearish bars will have wicks on the highs. Wick, wick. So bearish, bearish, bearish. Some of them won't have a wick on either side. And then you have to know the colors. Wick, 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 wick. So these are all bear bars, and this is our first bull bars with the wick underneath. So that's important to, if you don't see that, it takes some practice, but if you have trouble reading which direction they're going, it's going to really mess with your sense of direction when it comes to doing analysis. So that is something I forget to remind people about, and it is just the way it works. So like I said, since I'm not using the MACD here, I'm gonna make it very small. I can still see it, but all I'm looking for is divergences. On the top indicator, what that is a Weiss wave on the front, and then there's a shaded area, like an overlay here. They're green or else red. Those are the green ones, see that? Those are divergences on another time frame. There's the red, or the orange, I should say, or brown. So it's not a buy and sell signal by itself, but along with other information, it can create signals that can get me into trades immediately, or it can identify locations where if I trade above or below them like this, with this one, I know that when it might not, but if it comes back in there, I think it does, that we need to save that level. Otherwise, the otherwise bears are going to take over and bulls will become trapped. So here you can see they try to save it, they fail to save it, and it immediately goes lower. And then they try to become resistance, try to make it into resistance. They turn it into support, and it goes higher. So it becomes a pivot. Okay. So that's what those are. And then down here, it's the volume zone oscillator on the bottom. But then I've got these shaded areas, which I call filters. And they're going to alert me to certain conditions on multiple time frames. And if I refer that to this time frame and I see if they agree, I might be able to have an idea of whether or not I want to be more aggressive or less aggressive. And then if they don't agree, but instead they're going in the opposite direction, since they're coming off of a very small time frame, I can actually use them to use them as bait to see what happens to the traders who follow that signal, and then whatever it does, you just want to do whatever is working. Either if they win. So here, as an example, the purple bars are bearish. So if you don't want to be aggressive, and you see the purple background here, the filter, coming up on an aggressive, on a colored bar here, some sort of aggressive signal, a condition that shows that sellers are doing something special, doesn't matter what. If they have success and push lower, it's probably bearish for the time being, because the smaller time frame said it was, and now this time frame suddenly turns. So when they line up together, it's usually a pretty good time to follow along. Orange or brown over that color is also bearish. Then white and blue and pink are bullish, and so these are bearish signals. And you can see they come on bearish bars. Well, this one doesn't. It had a big wick and immediately told you they were trapped. But even this one, you might have thought, oh, here's a purple signal, I'm going to aggressively short this, which isn't a very good idea for other reasons. But instead, if you're not aggressive and instead you wait to see what happens to that trader who followed this blindly, what you'd see is that they immediately get taken. And so, and they switch to white, which is bullish. And then if you look at the VZO, it can't get under the zero line. And we've got divergence to the upside. Everything there is bullish, yet we got this bearish trader to come in as bait and basically become cannon fodder. And so now pullbacks, as long as this holds, not as a brick wall, but as long as they defend under here, the buyers, we can probably get a long signal to work. And so when you get an aggressive signal like this, you can take it and get an extension, right? So that's how all of these that's how all of these work. The only exception is when looking for what we call dominance. So times where the buyers suddenly have more volume or range or anything than the sellers, I tend to switch to the 15 tick so I can get an earlier warning about that dominance occurring. Now, I will say, if the dominance occurs on a higher time frame, it's going to be a lot more consistent, a lot more reliable. But the smaller time frame dominance is also valid. So the challenge, for instance, is when you have situations where one time frame says that sellers are dominant, but the other time frame says that buyers are dominant. In that case, you usually go with the higher time frame. So, and then you also have to think about location. So, for instance, if we pull back to today, or let's do overnight quick, I'll just use it as an example. So here's the close from Monday. And then if you look at, we're going to look here at volume here, the gray and the green. Yeah, the green waves are bull waves and the gray waves are sell waves. And so each time we get a new colored wave, it's going to print a little white dash. See that? And then what we're going to do is see if the opposite color, in this case gray, can overtake that line, which happens right here. See that? It's hard to see if you don't have a big TV, but I will show you. It's slightly higher than the thick line. It's not a lot, but that's enough. So once you've done that, you know on that time frame here that sellers have taken control of volume. Okay? Right there. Now on the higher time frame, what that looked like was this. See that? Let me get rid of this line. So that little pink is the arrow from the smaller time frame, and so on the higher time frame you had this. Note in this case, the dash is here, and we have not yet reached it, right? On the higher time frame. And if you look before us, we had a bull wave that did break a bear wave's high. So your first assumption should be it's probably still bullish, but then you look at location and you realize, hold on a second, we put in a high here and then sold off with big volume. See that? Then we put in another high that was higher but had less volume. So that's what we call a divergent wave. When you have a divergent wave to the upside, so this one goes all the way up here before it hits the high, made a new high, but this green wave is very small. Now you immediately want to stop looking for longs for the time being until we return to some sort of established support, and you can start being a little more aggressive with your counter trend trading. And so rather than relying on the higher time frame, we want to switch to the smaller one in this case because of that divergence. So that divergence kind of tells you, hey, watch the smaller time frame. Well, now on the smaller time frame, what we see is they overtake volume dominance right there. We said right there is where that little dash gets beat. And so now what we should be asking is, since sellers have dominance now on the smaller time frame, where do buyers need to hold to make sure to keep the trend intact. The easiest way to tell on my screens, now this is not something that Simon uses, but it's something that I use and I've used for a long time, and I think it's relevant, so I'll talk about it. But if you're looking at this screen, what you can do is if you look at the background of the candles, there are either pink backgrounds or purple backgrounds on the down right here. See this? Purple. So when you have a rotation up that has a pink background, what that basically means is that there's confirmation that buyers have control at that point, and they are very likely to try to hold the low that produced that move. So it doesn't have to be the apex right before the red or the pink or whatever color that is. It's the low, the low that produced the move. So what we can do is we can back up. We can say, well, this is the first apex, but was that the low that produced this move, or was this like a higher low? And I would say it was a higher low of a trend, right? So let me move back and say, okay, well, what about this one? Was this one the low that produced the move up, or was this just like a consolidation low? And you could keep doing that until you get to the point where you get to a low that is an established low. It doesn't have to be the low of the day, and it doesn't even have to be the low of the area, but it needs to be a low that was clearly established and not overtaken. So, for instance, here we were bearish, right? We continue to be bearish all the way down to this low here. We would not have known that was the low of the area until for some time. But this did end up being, quote unquote, the low of that little session, let's say. So let's move this little green arrow up there, and that's 11.861.25. Okay, so that we're going to call the low of the area. That's not necessarily the level that bulls need to hold, though, because here they probably absorbed some sellers, and sellers gave up, which is what the pink means, and then they trapped this guy, and they went higher. Put in another seller, turned around, sellers tried to take it back. This is your established low. So we've got, I believe, yes. So we have an attempt by sellers to defend the area, and if this low holds, or if it's traded under just slightly and then they pull it up, that would be our established low that we would then be looking for as a line in the sand where buyers would be expected to show up more often than not, as long as they push higher here. But keep in mind, you don't know if they're going to push higher here until they do, so you can't just buy it unless you're really aggressive. Instead, you have to wait to make sure they make that higher high, which they do. So at this point, we say we are supernova. We've closed a bar above this apex high, the little flag, and we are clearly bullish. You can see on the lower time frame, you will start to see dominance. So this one is associated with this wave. The bears kept dominance at the low. Then we had this one wave up, and then we had that, and then we had this wave down. So if we mark this off, you can see that buyers met it, but they didn't quite beat it, but they met it. And then the next bear wave was up here. You can see, and then that one has not yet been taken, right? And then we put in this bear wave here, and that one has not yet been taken either. So on the tiny little time frame, we don't have volume confirmation that this is an area that buyers are likely to defend, but we have structural suggestions that it will be. It's just not confirmed yet. So as we move forward, what we see is that one bar later, buyers take the dominance of volume here and put in a wave that's bigger than the previous wave. It's even better if there's two of them, but for now, let's just not complicate things. We're just going to say that the buyers now have dominance on the 15 tick, okay? Now, here's the new part. That's something I've talked about in the past, and if you want to learn more about dominance, in volume dominance, I've got at least 2 videos
digging into that deeply, and it's a fascinating concept. I love Weiss waves; they're awesome. But I want to talk about something about what you do with that now that we have that dominance. Okay, so what we're gonna see when we get the dominance on the 15 tick, most of the time, you're gonna have a VZO, volume zone oscillator, breaking or testing the upper limits of normal, which is 40. That's the green area here. Negative 40 to 40 is like normal distribution. Anything above that is like quote unquote overbought, but if it's in a trend, it can stay there for as long as it wants. And then anything down here is considered oversold, but if it's a trend down, it can stay there as long as you want. So once we see this normal zone get broken over like this, which actually happened slightly earlier, the volume zone oscillator tells you here that you've broken over it, and then the Weiss wave confirms it here. So it's 1 bar early, but you can see that on the smaller time frame, on the smaller time frame, when that happens, when we get that dominance, we don't have confirmation that this is anything but a regular consolidation, because volume zone oscillator is hanging out right near the zero line. So the rule I'm using right now, and I think this makes sense, is the number one thing we need to see to be able to decide that it's time to start switching bullish. Not necessarily the time to stop shorting. That probably could have been done earlier on. But assuming you're not shorting the low and you're looking for a reversal, what you want to see first and foremost is the 15-minute VZO breaking above the 40 line while the 24 tick has room to the 40 line. Why? Because if this was just a little what's it called, like dead cat bounce, the thing that's gonna run, that where we're gonna run into problems is when we get overbought here and we get too much aggression on the bull side all at once on this high time frame, and then they need to cool off. So the fact that we have not, we literally just crossed the zero line right here. Right at the breakout point, they crossed the zero line. They put divergence in, but notice volume is still very low on this time frame. That's because they're comparing it to this impulse move down. Well, the thing is if we trap someone on that impulse move down, these guys are trapped when they got aggressive towards the low. If those guys are trapped, you don't actually need a lot of volume as long as price doesn't get down there, right? So as long as they defend this low, I don't care if there's volume there on this move up, as long as that low holds, which is why I'm calling it a line in the sand, because if it doesn't hold, well, then it's not bullish. Well, so if I'm going to expect it to hold, first of all, I'm going to need to pull back, right? Because we're not there yet. We're up here. So I want that pullback to be produced by the 15 tick pulling back through the zero line, but hanging on to the 40 area, to this average area, if possible. A pullback kind of like this would be good. But what I don't want is I don't want the 24 tick to be so high up that when they pull back, they break back into the average area, the green, and can't break back out of it, because that's a sign of bearishness. So what we'll see is they both move up. This one gets what looks like really oversold, and I used to make the mistake of thinking I needed to short that, and that's wrong. You don't, because this one is totally fine. Lots of room. Still got headroom. See that? We're still not even there. Now, we finally get a bearish bar on the 24 tick, and look, the VZO stayed within the neutral zone. Very healthy. This is what was throwing me off. The smaller time frame broke above the neutral zone, came back into the neutral zone, and appears to test it and reject it. See that? That's usually, I was used to, you see this kind of pattern at highs on the VZO. And so I was identifying this as a sell point and getting smoked initially, trying to use the 15 tick. Because I was confused about how volume worked. Well, the thing is, because I was thinking that if they have all this volume up here, they're getting trapped, and therefore you're gonna sell, and then you'll get under them, and you'll continue that this is just some sort of like a big pullback, and now it's gonna rip through this low, right? rather than thinking about the fact that I've got sellers who act as new buyers. And if that's the case, this low is going to be very hard to break. And if it does break, they're going to try to immediately defend it. And so the way you can see this, the difference between the two, a really easy way, is by looking at the volume zone oscillator. Like I said, on the 15 tick, it's going to look bearish because the 15 tick needs a pullback, right? But that pullback does not have to be a 24 tick lower low. That pullback could be something like a 50% or 61% retrace. So if we go like this, we can see that a 50% to 61.8% retrace is right there. That would be very normal if this was a bullish trend all of a sudden. And if you see they come down, they test underneath the 61.8, they can't get volume, the yellow line underneath it, and they give you a bullish signal. So here's the problem, or another problem, is this is purple bar star, which is a two bar combo that you're only supposed to take when it's really bullish. Well, how do I know it's really bullish? Well, you literally just apply all that information that we just talked about. On the 15 tick, we had a dominant buy wave, at least one, preferably two, but at least one dominant buy wave on the 15 tick. It's okay if we got a pullback after that. In fact, it's preferred that we get a pullback after that, because then we have enough space. See how this pulled back and it burned off that overbought condition, and now it's sitting at the bottom again. It's ready to rock to make a second dominant high. So the 15 tick is just going to make much bigger undulations for one little rotation, whereas the 24 tick is going to basically look like it goes from being very bearish to slightly neutral for a little while inside the green, having trouble getting out of it on either side. When it gets out a little bit below, it suddenly rejects. That's not bearish. And then when it tries to get up here, it rejects. And you could say, well, that doesn't look bullish either. So it's neutral, right? But the smaller time frame having dominant volume says, okay, if we're neutral and buyers have control up here, as long as they can hold that reference low here, well, then I don't want to be shorting anymore, in my opinion. I don't need to short this to try to get to here. I want to try to get to the next apex, which is the little flags. Well, there's a flag down here, and I just said that it's really hard to get there, right? They're going to defend it because of these trapped sellers. So where's the next apex? Well, you can look way up here, and there's one all the way up here by this low volume node above the point of control from yesterday. Well, that's much better risk reward, right, to the upside. So I would prefer to go higher. But I'm not going to buy the breakout when I've got the 24 tick looking like this, because that's not bullish. And it gave us this purple sign, which says that we're probably getting some sort of range expansion and that the next low may take out an apex. Well, the apex is this little flag. So there's one here and there's one here. So either one of those apexes, once you see the purple, is likely to get taken. Now, if it doesn't, it's really bullish. But usually it does. So what we would expect is that we'd get some sort of a pullback. Now, orange means trend continuation in that direction. We want it to confirm with VZO. So see how VZO is also going bearish? And it's not like it's just bearish after being bullish for it's like it's neutral for a while or bearish for a while and then it's turned around, right? It's not just like see, this one's fine. It was neutral, it went higher, it rejected, it came down, it can't get over the zero line, it rejects again. That's where you want these to look. So that's how you want these to look. How you don't want them to look is like this, where it was bearish for a long time. This one was great, right? But then it got underneath the neutral and it broke back up here. It's trying to get bearish. They're getting trend continuation signals, but there's nowhere to go and it bounces because it's neutral. It's not that bearish anymore. This is a sign of a trapped trader. If you have a V or a W on your, like a head and shoulders sort of pattern, on your VZO, and you get a sell signal down here, you might not want to buy it right away. But man, if you get over that guy, like right here, you're gonna squeeze him out, right? Now, is it going to be an immediate squeeze with a 0 MAE? No. You need to have a proper pullback. You can either do that on the 15 tick, or you can wait for it to happen on the 24 tick. Now, the only trouble with waiting for a pullback is that our natural target is going to be the next apex. Well, the next apex is right here. And there's really, unless you have a higher time frame read, there's really nothing that tells you whether or not that's going to break or not. All we know is whether or not the rotation is likely to be higher or lower. And at the moment, it looks neutral to bullish based on the indicators and stuff. So, and the fact that we have price action with trap traders to the downside, meaning that the upside is going to be the path of least resistance. So we've got the look we want on the VZO. Notice we did not get a buy signal. We got the sell on the 15 tick. See that? We got the orange bearish. It's not necessarily sell, but the purple was bearish, and then we made a divergent high. Here it went higher on the price, lower on the indicator, and then we got another one, brown, continuation lower. So like I said, what we should expect still is that one to get broken. It does, right? That makes sense. And now we're looking to see, can sellers break this one? And so they come down a little bit and they try, but they can't break this apex. See that? I would have preferred that they did, because it would have given me better risk reward. And here, you're getting in here and you're targeting this more or less. And your stop has to go underneath this bar. So while it's bullish, it's not ultra great odds. What the better odds trade is if we can now get underneath this and then what we call trap back in, close a bar back inside the range again. So in this case, it does go back up to this apex and then turns around, which is very natural. You're going to see the VZO gave a sell here, but what happened? They got trapped. See that? They couldn't get it to stay underneath the 0 line, so it's probably not ready yet, which is why I don't sell every one of these, because you get more information if you just wait. And there wasn't really any reason to think it was bearish anyway, so bearish continuation at this point doesn't really make a lot of sense. Plus you had dominance on the bull side on the move up. But we are still looking at this low as being important, right? So if I can get a pullback and a trap back into this apex or that apex, that would be much better. So I wait. Now you might say like, oh, wait a minute, but we got a big dominant sell wave, aren't you bearish? Unfortunately, it's not that simple. Just because you got a dominant sell wave there does not mean that you're immediately bearish unless you thought this was resistance. They really only matter, the wave dominance, at the points where it's likely support and resistance. If it's just chopping around in the middle of a range, it doesn't really matter. Now, if you read this like this is the high, and you think we're going to come back and take out the low, even though we have trap traders here, if you somehow see that differently than I do, then you might say, well, that was a big wave, and the sellers made a bigger one. And I'd say, okay, that's cool. Then don't buy the trap, but realize that if buyers hold this level that you say now is a dominant wave that's bigger than it, right? If they hold that level on the next pullback, or they defend it, realize that you are wrong and it's bullish. Because the small time frame doesn't mean everything. And in this case, they could not get a bearish wave that was dominant to a bullish wave on the higher time frame, despite the fact that they should have all this momentum. That bear wave should be very easy to build if it's bearish. And this bull wave shouldn't have very much strength. The other big dead giveaway, look at all this divergence in here, and then look at where it is. This first one is here on the triangle, right after that pivot. And if you think about what divergence means, that should make some sense. And then all the rest of them are up at the highs. And if you look, that first bar was this one, right? And then it's this one. Those are your divergent bars. So what that means, more or less, is that on the way up, we had more sellers than buyers getting aggressive, trying to defend up there. So it makes sense for price to come back and test underneath them. But as long as we retake that area and we don't develop volume underneath it, it's bullish. And so if you put a line underneath the one with divergence, remember it's this one, Okay, and then you watch the yellow line where all the volume is. The bear, when they approach it, the bear bar is purple. See that? Which does not have a lot of energy. It's basically just buyers giving up and sellers getting a freebie, but they didn't have to push very hard. As soon as they got the yellow line underneath that important low, look what happened. Buyers showed up aggressively, which is what the star means. Is that bear? That's not bearish. So if you read it the right way, you won't have to worry about it. But if you ever find yourself getting flipped and start thinking about things like, oh wait, but that's a bigger wave, so that must be bearish. It's like it might be, but if that's the case, here's what would happen. You'd get all the sellers piling in here, there'd be an impulse wave down, and you'd get this volume down here on a big bear bar. And then when they try to retrace it, they'll make a lower high and it'll roll over. But that's not what we're seeing here. Even though they have volume and they had the sell signal in the small time frame, which did produce a nice pullback that was very viable. The reason why you're not seeing any sell signals here on the higher time frame is that on this time frame we're no longer bearish. This guy, this orange one, got totally trapped. See that? We have not been able to get back to the very highest point that anybody could have sold in that bar was right here. 11,879.25. So when the market pulls back and then shoots higher and then tries to come back into that level, and for some reason someone's sitting there waiting to buy here at 11,884.75, guess why? More likely than not, it's because they were off sides when they shorted here. And so now they bought this, and now they're buying this because they're not out of their position yet. Well, if they're stuck in a position going short in the market, they think the market's going higher. What do we want to do? Do we want to be short? No, we don't want to be locked in a cage with them. We want to, turn the key and lock them up and get paid to frickin' guard the gate, right? So instead, what we can do is we can be aggressive with the purple bar star if you want, or the better move, in my opinion, is wait to see what happens when these apexes get stopped out and see if you can't get a better risk reward. So, but we don't get bearish. That's the thing. It's just because you see another orange doesn't mean you have to immediately think I'm going to sell to the new low, right? So here we immediately trap him. See this yellow line getting above the high of the bar that's associated with this, and then the VZO not being able to stay under the zero line. That's not bearish. So there were signs all the way through, even overnight, that whatever sell-off they were going to produce, it was not going to hold. The sell program was not going to work out. Now, like I said, what I wanted to get underneath that and then go higher so I had better risk reward. And overnight, that just didn't develop, if I remember correctly. Yeah, it shot higher before it rolled over. So here it was still bullish. Look at VZO. It's finally trying to get out of this neutral zone. And then look at the 15 tick at the same time. Neutral zone. Super, super healthy. Now, this yellow here is something I'm testing out. And what we saw here is basically what we call like a raid, right? So if you look, the yellow occurs and it works well as a scalp, particularly when you do something like this, where you have stop orders sitting up here on the market in the like people put their stop orders behind that visual high, and the market comes up and sweeps those stop orders and then immediately crushes the limit order book. And the result of that is volume zone oscillator looks like it's breaking out into the bullish territory outside of green, and then suddenly gets pulled back in, kind of like a purple bar, but the difference is on this one, they can't get back out. So now it's not always an immediate sell. If it's really bullish, like trending like it was on Monday, this yellow bar won't even produce a bearish VZO. It will come down and then it will try to get under here and it will just squeeze the living daylights out of the shorts. So these big, I'm not gonna call them impulsive because that's not what it is. See, the volume was low on this move, but the range was big. See that? The volume was not very big. Look, this is the top. This volume on the way down on that wave, not very big. So those yellow ones, you should be getting If it's what you think, if it's what I think it is, where they're testing into resistance, they swept all the stops, and now they're going to turn around and rip down to a lower low, which is where those yellow bars work really well, those yellow colors. What you should see here is a big impulse move down. It should look bigger than this. But nope, we get a little consolidation wave and a trap back in. So this becomes a decent buy when you see that yellow bar not produce anything but a couple, like a purple bar, 20 ticks lower, and then a bounce. So if you're scalping the smaller time frame, you can actually buy this purple bar followed by diamond. In my opinion, now on Simon's it looks a little different. It's a yellow diamond, but on mine it's a pink diamond. But that, I think that's actually acceptable. And then on the smaller time frame too, you did get the trap back in here, and you got green bar, pink bar, and then dynamite signal here. But that one didn't go very far. But it's still bullish, is what I'm trying to say. Is when you get these blue crosses producing like extensions, it's almost always a good place to buy if they pull back underneath them and bounce. So let me see if I can find another one of those. We'll see another one. Okay, so that one pulls back here. That's the buy. You get another plus, so now getting under this one is good. Okay, and they just start taking off. Now, look what happens here on my 24 tick. See this pink that I talked about, right? Once you see, on my screen, once you see that pink background, again, like I mentioned in the beginning, this is where we are now. We know right when it turns pink right here, which is right away, it's not delayed at all. We know that the established low, right, not the low right here, but the wherever they tried to push lower and they couldn't get to wherever they were getting. And that, it takes a little practice to see what that is, but it's usually right before things start getting exciting. So, and you're probably going to have some divergence on it. Not necessarily at the low, but in that wave. You're gonna want to mark, once you've seen the pink on my screen, you're gonna want to mark this low and say, okay, if it's bullish and those bears are trapped, they're still going to defend this when we pull back. So no matter how high this goes, if we suddenly get a big pullback, a sell-off, as long as it's not impulsive straight from the high, but it like makes its way down here and it bounces there or just below it and breaks back up above 11,867.75, that buy is excellent. Okay, so just realize that that's a really good trade that I am regularly going to be taking, but I need those conditions to be there. Okay, so to set it up, and remember, it's not along at the pink, it's now at this pink. Now I'm confirmed that this level is definitely a place I want to be long if I get the chance. Okay, so if you look at what VZO did here after the pink, now the other thing to think about with the pink, just so you know, so it turns everything up a notch for me when it comes to deciding whether or not I want to be aggressive or passive. Once I've seen pink, it's like seeing blood in the water, right? Like all of a sudden, if I was hesitant to be buying pullbacks because I was afraid that it might roll over, I now know where that line in the sand is, and basically any aggressive signal that I can get to develop as close to this support as possible is worth trying, as long as I've got risk reward. And so even if it's just a gentle pullback, or maybe preferably two pullbacks, as long as I don't see purple, which is the opposite of pink, the inverse of it, and as long as I don't have other signs, there's a couple other things I'll explain that kind of turn me off from this idea. But assuming we haven't had any of those, the general assumption should be once you see pink, I'm only buying. And like I said, there's very, very few situations where the bear signals will actually set me up for a short. Instead, what you're going to see is the bear signals will set me up for a trap. So I get to spring a trap on the sellers that are trying to defend as they get squeezed. Now, Today was a little bit tricky because we ran into the point of control from yesterday, and that acted. It usually acts as a magnet and also like as a chop area, like a meat chopper. You really don't want to spend. You don't want to be entering trades in general near yesterday's point of control, particularly if you think it might be a balance day. The only time when yesterday's point of control really comes in handy is when you've gapped up or gap down, and then you return to that point of control and see it hold, and then the direction of the gap continues. That would be a place where yesterday's point of control could be a good entry, but generally it would be after the rejection. Eventually we're going to come back to this point, but I just want to show you how at the end of the day yesterday, it was already starting to kind of act as a point of resistance, and you could have kind of guessed that today was probably going to work that out and produce a balance day. So you can see remember at this time, Monday's close, we had a pretty good idea that this is where the point of control was going to be or around there. Didn't know exactly where it's going to be, but we already kind of knew it was up there. So getting an idea of buying up here, you should just talk yourself out of it. You're chasing if you're doing that. Especially at the end of the day. So anyway, we get some sellers coming in, and again, we get the buy signal. It's up to you. If you want to be aggressive and take it right in the point of control, you can. I don't do that, right? But you can. And it sometimes will produce at least 10 points. This time it did what I would expect it to do, and it just rolled over. If you wanted to see a hint of how not to get caught doing it, if you didn't see the point of control, but you had access to VZO, or volume in general, is take a look at what happened at the high. So on the smaller time frame, remember now we're at the high, right? Now we're no longer evaluating at the low like we were before. Now we're at the high, we're at the opposite end of this, and so you can do the same thing in reverse now, and you can say, well, if this is still bullish and it's building momentum, and I want to buy a breakout, right? Not a pullback, a breakout. Then the bulls should keep dominance of volume on all time frames. Well, here the bears took dominance on this small time frame. So that right there is like, maybe I don't want to be buying breakouts. I might want to wait for a pullback, right? The other thing to think about is when you look at VZO, the 24 to remember what I talked about back here. What we really want to see at a breakout is similar to what you saw here, where the 24 tick on the left is just peeking over the zero line, and it's got plenty of headroom to start making a trend. And it's okay if the 15 tick, the smaller time frame, it's okay if that's like maybe not there, but like approaching the overbought quote unquote area, because we can correct in time and just keep going as long as we have room on the 24. But look what happened to the 24. Once it got to the high, it spiked up, right? And then it made what I call a sweep. It swept all the way from above neutral to below neutral. Almost every time it does this, I've got a whole video talking about VZO if you want more information on it. It's a really cool tool, and I talk about this in there. But whenever that happens, that big sweep, generally the next stage is a phase change. It can be from bullish trend to balance to bearish trend. It can be anywhere, right? But if you were expanding in range, you're probably going to contract in range. If you've been contracting in range, you're probably going to be expanding in range. And then you can get a hint of which direction you might be going based on location. And so in this case, like I said, we're right at resistance at that point of control of the day yesterday. And then they try to push way up high into the overbought, and it just goes all the way to oversold. So this move right here, in my opinion, is not what we want to see if we think that this is a building momentum, a trend that's building momentum. If it's building momentum, we shouldn't be exiting like that. We should be hanging out up there like this. That's what we should see, if anything. And the zero line should act as support, like it did here. But you can see that when it doesn't, and instead you get up there and then you pull back, right? You can get pretty big pullbacks. Now on this 15 tick, that pullback doesn't look like much, right? It's only 20 points. Well, on the 24 tick, that pullback is gonna end up being much more significant. So here we hit the 0 line, they make one more high, and then I believe they give a pretty good pullback. At least that's what I would expect. Could be wrong. Yeah. Yeah. That makes sense. So they swept all the stops up here, got everybody to chase at the very high, made a divergent high on all the indicators. See how these are lower, but this is higher on the higher time frame? And that was it. And then if you look at volume at the high, minuscule. Nothing there compared to this high where they had the big sweep. There was a ton of volume there. And then so you could say, all right, well then where did that start? If you were evaluating that at that time, you could say, where did we start lifting off exponential? Where did we start getting FOMO and chasers and all the momentum traders start to break in here that could end up, we know what they do, but at the time they could have ended up being trapped. Well, they started right where it turns pink. So see where it turns pink here? This bar here is what started it all. It's actually technically the spark, the pink, but you don't know really until here. If you're going to be aggressive, you can actually buy this. The green bar followed by pink bar in a bullish trend when it's got a triangle on it, really strong, really, really good. But it's aggressive because sometimes it fails, right? But once you get the pink background there, what you can do is you can actually mark that area. Now in this case, it's got a red line on it already, right underneath there. See that? So that now can be like your new level that you want to watch, because if we get under that, it's gonna you know the phase has changed. It's no longer just bull. Once you get under one of these pink things, it's not immediately bear, but it's probably balance or bear. And then what we should expect is to do exactly what we said, is to come back to one of these apexes, sweep underneath it, and then see if we can get them to bounce. So we'll check and see if these turn into buys. They do. So if you were aggressive and you wanted to try to short this, how would you do it? Right? That's a question I get a lot because I don't talk about short side a lot. So let me show you a couple ways you could have done it. Well, number one is you might not have wanted to because you were working within an area of this pink here. That area right here is going to get defended the first time very often. So if you're going to short it, don't short it aggressively expecting this to break. It's not usually going to break the first time. Once they take out the pink bars, the pink bars of the wave of the pink background, you have a chance of a rollover. So here's one pink bar, right? That low is right here. So by the time you are done with this bar, now the next high, they can break through this little zone very easily. The problem is we have another pink bar right here. And if you look, he had a tiny little wick that did not get tested. See that? And these pink bars are very powerful. So what you're going to see, I believe, what you usually see, is that also acts as support on the first try. Now, it doesn't have to make a new high, but it usually does get some sort of an impulse move. And so then you'd have to go back and start watching your volume again to see if you can get buyers to show up. So what you'll see is they use it as resistance. Okay, I'm wrong. Sometimes they will use that. They tried, but they were early. See how they tried to bounce it early? They didn't fill it, and then they fill it there, and it's over already. So in that case, it didn't trigger. To get it to trigger bullish, you would need this bar to be bull, preferably with like an aggressive signal on it, and you would need to have some volume going in the direction that you want to trade, which in this case, you definitely didn't. This is all bearish volume. And then you had if you wanted to be bearish at that point, you're being much more conservative and your win rate's going to improve. Whereas if you want to be bearish up here, you are not necessarily going to be wrong, but you have to be ready to take the trade more than once or twice. Because what you're going to do is, if, like, let's say you're using divergence, well, then you'll get short here and you'll put your stop 10 points higher and they'll stop you out and then that'll be the high, right? So let's say you were using orange bars, which is not a bad idea. Those are usually pretty strong. If it's bearish, okay, you get short here after this high, right? The diversion high. You wait for the orange bar. Well, then you come up, you get stopped out, and then you'd have to get back in, and the orange bar comes in again, right? So that one doesn't work all that well. So the only other way I know that works relatively well is if you can get a powerful bar at the apex. This. Now you're not going to know it's an apex till a couple bars later, but this bar or this bar, if you get that, and it gets one of these on there, the little flags. Again, you won't know that till about 3 bars later. So right about here, when that apex shows up, now you can start looking for signs of a. You can start looking for shorts on a pullback back up into that apex bar. So in other words, for the last one, the best one, it's anything in here that gets rejected. So this, that's probably close enough. And then if they get up there again, I don't remember if they do. Yeah, that. So see the star. Preferably, I want to see a sign of aggression. This is still good too. Plus, all of those are fine on the right side of this apex once it shows up. And I've gotten volume to shift. I've gotten, VZO to look bearish, not bullish, right? I'm not just doing this like at this time, right? Don't do it when the market's doing that. That's not going to work. But if you wait for the sweep, right, where VZO is overbought and it goes all the way to oversold, and it's like, oh, well, they're probably going to change phases here. Your very, very, very first conservative sell would be, let's wait to get a pullback into there and see if they defend it. So you could take this one, and that one would probably stop if you were that aggressive. But instead, I would say this is good, or this is good. Because you actually got out of the area, you left the area, you came back into it, and there were still sellers there. So that's your better entry, in my opinion. But like I said, you got to work on the patterns that make sense to you, and there's so many patterns to learn. You don't need them all. A lot of people in the room don't even trade to the short side because it's complicated. You have to go back and forth, and you don't need to. You can just trade to one side. Now, the other thing that's kind of cool about this new system that I'm using with the colored areas is that is a very, very crude shortcut way to know whether or not I can safely sell. If I'm getting to a high of day or a high of area and I don't have one of these orange ones, but there was an orange one underneath me or a purple, a bearish one, and he's under me, I really don't want to be a seller because that guy is trapped, right? So unless I can target this wick of this bar, and that's my target, and I still have pretty good risk reward, I don't really want to be a seller here unless I trap bulls instead. So I'd have to wait for bull signals and then a trap and all that. But what you'll see happens is when they put in this new high, we get a new sell signal, right? Now, I would prefer these sell signals confirm with VZO dropping underneath the zero line, but you don't have to have that. But that would be here, and they give another one. So that tells me that this is probably my best case scenario because I've gotten a new seller and which was here, and I've gotten under that seller rather than behind him, right? They used to be trapping sellers, and now the market got a seller and they couldn't trap them. That's the way to think about it. We are below this first seller. Sorry, this one. As long as you are below this first seller when you enter this wick here, as long as you're here or below at your entry, you're not joining the side that's trapped. You are potentially trapping the longs, right? Now you could wait if you want for another one, and then you'd enter here, on this one, right? VCO still below 0, still aggressive, triangle up stars, a good 2-bar combo, all that works, right? That all still works. It's just that if you want to, it's kind of helpful if you've got the signals to wait. Now on the smaller time frame, if you said, well, I only want to take the most conservative entry possible, I need to trap along before I'm willing to get short. And that's fine. You just might not find it on every time frame every time. But you could look for an aggressive bar like a star or a green bar, or on any time frame you could look for a white area or a pink area or a blue area, then mark that range and say, hey, if I can get under that, which is right here, if I can get, it's in the same spot as this star, right? If I can get under him and then we pull back and reject, I'm probably in pretty good shape to short. So look, we got under him, right? If it's bullish, it's gonna reject right there. Instead, what they do, they rejected this way. So this is your entry, in my opinion. The conservative. So this is your aggressive entry. This is your conservative entry. But look at how long that took to explain. But once you know what the pattern is, how simple it is, right? I see pink. Like, think about this. You already know everything, right? You know what's supposed to happen. I got a short. It's the same exact thing on the other side. I got a short to get in low, right? I wait till he's dropped if I want to be conservative. Once I'm moving above him and I've got an aggressive signal and they try to go lower, but he acts as support, I know I'm bullish. That's my most conservative entry here. And then we go bullish. It turns, we get a pullback. That's another conservative entry in the same area. It turns pink here. So we should stop thinking about counter trend trading unless we trap along, or we get, and we should expect this area down here to now act as support, right? This base should now hold. Sorry, not that one. This one should now hold if pulled back into. So now we don't get another pullback. The pink goes away. And now we're starting to think, oh, okay, well, maybe they're going to come back and test this like I want them to. If I want to be aggressive and short, wait until I either have a trapped trader or a seller that's not getting trapped. There's my seller. He's also my buyer. They start to go lower. They try to trap him, and there's another one, and he has not gotten trapped. We're not trading up here like we were after this one, trading up here, right? So now that one's your aggressive entry. And now if you didn't want to take that because it was right at the same exact level of the low, which happens, you could wait for the next confirmed entry, which would be here, rejecting on a pullback, and then you're off to the races. Now look where we head to as you get continued sell suggestions. They come right to this level that I said needs to be the level that gets held. And look what they do. They do absolutely nothing there, right? That's great. That's great when that happens, because what that means is I didn't lose any money. There was no reason to do anything here, including cover a short, but there's nothing to do here because that was the level. If it's bullish, this holds, and it didn't. So instead, you keep being bearish until you've got reason to think that it's not. Now look, it does act as resistance. If you want to use it that way, it's okay. Just realize you're probably shorting in the hole and be quick about it. So note here we get a purple right here, right? But on the way down, we had all these purples. See the purples? Purple, purple on the chart, on the bar chart. This is the opposite as the pink, okay? So you could do the exact same process as you did for the pink. Once I see purple, I know I'm probably bearish. If it comes back up here and hits the established support, which is here, we're probably going to need to hold that. Otherwise, we're going to race higher, right? So if it's going to make a full retracement, it better not get much farther than that. So that's the point of control. That's where I expect sellers to show up. Maybe not exactly at that point, but around there, right? They really shouldn't give this up. And if they do, they have to immediately reject it and take this back. Otherwise, it's bullish. So I already know that because of this purple. And I know it right here, right? So now I can comfortably short pretty much anything aggressive as long as I know that I have to stop shorting if they start breaking up here. So pink bar diamond can be a short. Blue square or blue cross that gets beat can be, with the purple bar particularly, can be a short. The rings that get immediately beat are probably shorts. See that? Especially on aggressive bars. All of those, and then any 2-bar combos, like a triangle up followed by a star to the downside, those would all be shorts as long as I can't trade back above one of these purples. Now, the tricky part we didn't see over here, something kind of sneaky, is that if the purple goes away, you have to kind of reevaluate if it comes back again. So look, it went away, and then purple came back again here, right? So now you kind of have to reevaluate. You kind of have to ask, has anything changed? Have I gotten over and held over that previous one? And I'd say no, nothing really changed. You tested over it, they rejected. It's still the same condition. It's just kind of paused for a minute. So there's no change here. But look, it goes away again, and we make a big drop, and then it comes back. Has anything changed? Yeah, it's way more bullish, or way more bearish now, right? It was like starting to get bearish there, and now it's like, whoa, real severe. Here's more sell signals, right? So now that it's really severe, we can say, okay, wait, where do these bears get trapped if the market turns? And I would say they probably get trapped here, most likely. If we get above this point now, it's probably going to be not a very good idea to start shorting. So let's see if this low volume node starts to act as resistance. And then if we break over that, which I expect, and then if we break over that, does it go straight to this or not, right? That's kind of that would be the research question to see if that's true most of the time or not. We test that over and over again. Okay, we come down, we make another purple, right? And then the purple goes away. So we would once again, or is that the third one? Yeah, I guess that's the one we just did. So now we can say, all right, it's definitely bearish if it stays under the purple. If it gets over the purple, we might be in a neutral territory, but we know it's bullish if we can now start breaking over established support, which I think is this one. You could say it's this one because it made this one, then it pulled back, but I think that's just a lower high, personally. It's not necessarily established support, but I could be wrong because of this. It could be this one. Let's see. One way or another, it's up there. So they mess around down here a little bit. You get another sell signal on the indicator, and they put another purple in. Great. So remember, we had a break and then a purple. Has anything changed? Oh, hell yeah, it did, right? This was mega bearish, and I said that best case scenario, bears needed to hold this, but any of this action could definitely be bearish. Well, now they put in another purple here. So now it's like, okay, what do they need to hold now to make sure it stays bearish? Yes, it's bearish, right? You're not going to get the purple if it's not. But the established support now is right here. See that? If this is being interpreted by the market as a bearish move, that is my established support. There was no, that's not like a, see, that was a higher high. See, that's not like a lower high that just like was part of a trend. That was actually a higher high on this time frame, and yet we were able to turn it purple on this time frame. So this high now should be, you can sell it if they test behind it and then reject, but if they put volume above that, it's not bearish, okay, for that on that time frame. We haven't seen a huge sweep yet. This one was pretty big, but it did pause for a minute, so that's usually not quite the same as a sweep. So I'd still think it's bearish for the time being, unless they've trapped somebody, which they haven't. And there we go. So we right away break over this. Now, if this rejects, it's bearish, and you could short it. So like this here, I would think that, wait, did we get, it depends on if we got a VPOC above it. Did we get, see, I don't know if this is in the right spot. We did. See, we got the yellow line on the white bar was above this. So we are done. No, this is the open, by the way. So we should be done shorting more or less if we were shorting overnight. This is where you get out because they've established volume above this support rather than rejecting it and turning it into a new resistance. So it's, I mean, established resistance that's now they're breaking over it, right? So the purple bar got trapped. Now this guy is also trapped. See that? So I would not be surprised if we get a buyer in here. That would make sense. And then I could start looking at my, since I don't have pink to identify that it's trend up or potentially trend up, I'm now looking for dominant waves, and I got one right at the open. This one, right? So again, with that dominant wave, I know that I can take aggressive trades to the long side on pullbacks, but it's not necessarily trend up, right? So we wait. Okay, so that's not really an established one. Oh, look, this one gave us a sweep. See that? The smaller time frame gave us a sweep, suggesting perhaps that starting here, whatever was happening back here is probably over. And what was happening over here? Bearish to neutral. Probably done being bearish to neutral for the time being. So we'll see. On that tiny little time frame. Does it just get more bearish? Oh, do they end up rejecting it? That's funny. I forgot. Or do they hold this? Because I would expect now bulls would try to hold this. This should be neutral. So sell. If you want to scalp it, you can. But I would say don't, because you put volume above that important resistance. And usually I'm buying dips here. But I don't have pink yet. So I don't know for sure that I want to be super aggressive. But if I get a trap down here, I'll take it. Now this did not trap on this time frame, unfortunately. It didn't quite make it down to here. But if you look closely, it did, what did it do? Did it trap somebody down there? Not really. Hard to say that that's an easy buy. And I didn't get a signal down here. So let's just skip it. Now we did get, oh, but it wasn't, okay, we got the pink here. Pink background, right? So now we can start looking at where is established support. We should hold it. It's probably bullish. If we get under established support, we need to see them immediately reject it. Otherwise, it is bearish, right? So established support now, I would say, is right here. It's this blue line, right? They established that support. They came up. They made a high. They made a higher low from. They made a high here. They put in an apex. They traded under the apex. They made a higher low here, and now I assume now it's pink. So now it's bullish. So this established low needs to hold. Or if we trade under it, we need to immediately reject it. Otherwise, if we don't hold it, it's obviously bearish. But that move, pulling back underneath this, and underneath this, and then immediately jumping back up, extremely high odds move. Really good place for a trade. Okay, so pink stays on. That's a great sign. We did get divergences here triggering, which is what we want to see on that first pink bar, right? We went in that first bull bar. See, this one didn't have any. No divergences. It did have good volume, though. And then this one, and they had a weak down bar, down wave. And then now a bigger, stronger up wave, right? So now things are cooking. And we've gotten a pink period, right? And now that pink period has stopped. So remember, you have to evaluate them one at a time. So what are we thinking now? Well, this is the low of this pink period, right? So that's a great place to look for a trap, or maybe a pink bar star kind of thing, 2-bar combo. And then the very best place would be to come all the way back here or here and trap back in. I don't really want to trade breakouts yet because I don't see it as a trend day. And my target's like right here or right here. Okay, so I prefer to get a better pullback. That is a 2-bar combo. It's not a very strong one, and it's not a very big pullback. So I didn't take that. But then it gave plus pink, and you could have taken that for the breakout. You just had to be really fast with it, unfortunately. It didn't give you much of a chance to do anything. But notice what it did. It turned pink again, right? Did anything change from this pink to this pink? I'd say no. So established support still on the bottom. I would still take a trap back in here, but I really want it to be back here or back here. That's where I really want the traps to develop. And so they pull back. They pull back. Okay, this one did not quite trap. See that? But it is touching back to where this resistance was. I don't have a setup like that, but it makes sense that it would bounce here. Okay, it's just a green bar. I don't have a triangle down here. I don't have anything. And these sellers that I probably would not have sold with because of the fact that it looks bullish and it's supernova, we didn't trap them. See how this guy is associated with this orange? We have to get above him to really think that it gets really crazy bullish right now. So I didn't see anything worth taking there. On the smaller time frame, we had double divergence. We had divergence here and then divergence here. That, if it's bullish, is pretty strong, and I'd say it is bullish. So on the smaller time frame, you could probably try for a 10-point move, but I didn't see the opportunity here for a really big move. And it kind of chopped around a bit, and then gave triangle down, green bar. That's a pretty, and then it's got the plus going down, followed by green bar. I would have preferred that we came back and stopped underneath this because of this plus. I wanted to get under this and then jump, so I missed that one. But then plus pink, it's a decent breakout, and now we have trapped this guy, and this guy got trapped as well. We're above him. Look at all the divergences, and notice that we are bull dominant on the smaller time frame and on the higher time frame. See, they can't get above this bull bar, this bull wave. So everything about this looks bullish. There's no reason to think that this won't work. The only issue is risk reward, because you're trading right at the top, right? That's the only negative of this. Everything else is, as long as you see it's bullish and you're not thinking that the low is going to get taken out, you're good. I don't think you have to be that aggressive if you don't want to. So that one worked. Then we got one bar that was the pink background, which is always a little bit iffy because it can be capitulation. So we had a big push here, right? Lots and lots of volume on all the time frames. They turn it pink. It looks like it's going higher. It does go higher, but the pink goes away, meaning that momentum is kind of slowing down. So it's like, why is momentum slowing down? That's a little strange. Well, let's look at the VZO and see if we have any signs of weakness. Well, look, it's completely overbought here. It's getting to be completely overbought here. Doesn't mean it has to turn around right away, but it's probably going to rest for a bit. It can't keep doing that forever. It needs to at least pull back a bit. So I wouldn't stay long personally. I would try to, if you notice that, you want to kind of settle down. And now look, they make a big drop back into the green area on both time frames, right? Big drop. So that's a really, really, really nice pullback to sort of relax that indicator a little bit. And now I'm not bearish. And this is where everyone fucks this up. It's not bearish. It can't be unless you take out the supports, right? Don't be so quick to fight the trend. Assume that you want to be a buyer, but if you weren't aggressive enough to take this one, then your question is, well, how low can I go? Well, if this is a new pink bar and you want to be really conservative, you ask yourself, well, where is established support? I would say established support is right here where the green bar is. That became established support. Then we had a sign of momentum. So this white line needs to be defended. Otherwise, you can stop being bullish. So if you want to be conservative, wait till they pull back here. See if they trap it in, trap back in, and you're good. Are you going to catch every single move like that? No, but you're going to have very few stops. Notice we've got some disagreement here. Bearish, bullish, bearish. So probably, and then here too, bearish, bullish, bearish. Yeah, like that's a little strange. Like if I'm long, I'm definitely nervous about that. Like, oh, what's going on? And they do give another capitulation. This was into PMI, and then pink, right? So now we ask ourselves, where's established support? I'd say it's still right here at the white. Okay, we go higher. We get right to the top of yesterday's point of control. They reverse it with a purple, orange. There's no reason to think this is going to suddenly just fall out of bed, really, because there's no big buyer here. The one thing that was a little bit sneaky, again, was the single bar pink momentum indicator, and it aligned with a divergence. See that? When the very next bar after a divergence is, see, usually after a divergence, even if it's a bear bar, the next bar is usually bull. It's not always a good buy because you're probably better off waiting for a pullback back into that area, like this on this time frame. But if it's a bear bar, if it's bullish divergence and then immediately bear bar, something's wrong if that's at the top. That's a problem. That momentum is weak. Right, we got enough momentum to trigger the pink for one bar, and then it went away. So we barely reached the threshold, just like here, where we got pink in the background for one bar, and the very next bar was bearish, and it disappeared. Right, it doesn't mean it's bearish, as you can see. Sometimes you get one pink bar, you trade under it, and then you just rip. But it's a sign to be cautious and to certainly know where you want to be bearish if things turn around. If you want to be super aggressive, you could try to trade this to the short side since you trapped somebody, but you wouldn't know until here when that got underneath. This bar needs to get underneath this low, and I'd prefer it not to be pink or purple. I mean, so I would know. See, the bearish divergence is hard to see, but it's here too. So I probably would not take that one because it's still purple, so I'd still wait. So now I've confirmed that we're underneath that bearish divergence. I'm sorry, bullish divergence. So he's trapped. So now I really want to pull back if I want to short, is how I would do it. And it just didn't give it to me. And that's fine. Sometimes that happens. Notice what we did. We're trying to sweep, right? On this time frame, we did do a sweep. Remember what I said, when you sweep, usually whatever you were doing, it's going to be a phase change of some kind. So either it's going to go from trending to balance, balance trending, one trend to the other trend. So we were bullish, and it's probably not going to keep being super bullish now. So what should we expect? Well, this white line is probably going to get tested, and we can probably get a trap off of it. But if it doesn't continue breaking new highs, it may just be balance. Okay, so we wait. They pull back right into it. Notice there's no buy signals here. You got to be careful. Don't start buying purple bar, green bar now. I actually bought this today. That was a mistake. You can't. See, this was all bullish, right? And I knew that if I pulled all the way back down here that I want to be a buyer. But this is really just one big wave down. See that? And then an attempt to trap back into this. This was not established support. It's just like consolidation, little trap run. That's not support. This is support. This isn't. So getting under this, they push with a ton of volume, try to push the market up. But look, the sellers didn't even need to push very hard to get that much. So really it's like, yeah, it probably has just started. And then look at this. The smaller time frame is a huge volume wave. So this is just taking some pressure off of them. And as soon as you get this bear signal, and you can see the VZO did not even make it to the zero line, something's not right if you think this is bullish. Something's not working, right? You need to wait. You need to be more patient for the better setup in that case. And so here they reject the ring. And we finally get down where we wanted to look for a trade in the very first place, which is under established support. They trap under it. They come back over it within one bar. It's got a star on it. It's green. Everything about it's great. That's the buy that I took. And it stopped out, which is fine. It happens, right? So my day was not great because I made one error here. And then I saw this as new established support and knew that most of the time it's going to get bought when you get the trap back in. And that's still true. It's just that sometimes it still stops, right? Now, the other way to read this is to say that I made a mistake adjusting that the fact that this was all pink up here, that I still need to leave my target for a trap back in at this established support. And that might be true. So let's see. How would I have done if now this is down here and here rather than up here? If I didn't move it, do I get an opportunity to trade there? So this is where most people in the room took the trade. And I only took it for like 10 points. I did get it, but I didn't keep it because I wasn't thinking about it from the higher time frame. But you can see how different this is. So look at the difference here between this one and this one. So in the one that doesn't work, smaller time frame, right here, smaller time frame made a big sweep after being bullish. Do we want to buy after a big sweep if it was just bullish? No, probably not. Probably not a good idea. This wave is just too strong. That's an impulse wave. You don't really want to fight those. You just barely got it oversold, and it's very easy at this point to push it back underneath unless it's gotten over the zero line. You can see that once it gets over the zero line, it tends to sort of wiggle, but if it can't get over the zero line, it probably won't do it. Now here, it hasn't even gotten below the zero line yet. This one actually has like leg room to stretch. And then plus, like I said, if you look to the left, we still are not underneath all of these pink areas. So the chances that a trap back in is a hugely, a very high likelihood trade is a little bit lower. So it's just an aggressive trade. All right, now this one, you still have a trap back in. Oh, sorry, it's this one. You still have an aggressive trade. Oh, was it this or that? If it's this one, it's kind of similar problem. You did not get to the zero line on either of these. You did have a divergent bar on the divergent wave on a small time frame, but notice that you did not trap anybody. The closest person to getting trapped is right here, and he's above you. So that's going to be your resistance. On the bigger time frame, your closest trap is here, and that is above you. So that's not going to help you either. He's going to act as resistance. See, these sell signals are working. This one was also divergent, so you could say that you're breaking over that. That might be the first hint that, hey, we got a divergent bar way at the low, and then the very next bar we close bullish. This is bearish divergence at the low. We close bullish, trapping him. Maybe we can actually break that high, and then this guy gets trapped, right? But having these up here could be a problem. The divergent wave down is a big hint because it's got very, very, very little volume into this low compared to the last big drop. So coming back and testing these purple areas might make a lot of sense. But it doesn't work. This one, again, you have the divergent wave again, and then you finally get capitulation. Notice in the small time frame, we're coming right up to the zero line, and on the big time frame, same thing. Right? It's ready to rock. It's spent time below. It's ready to rock. Now, there is no sign of anybody getting trapped here. So the only way you'd know to buy it is if you were paying attention to where support was earlier in the day. It was just the classic test below support, trap sellers on a balance day, and bounce. So if you were prepared for that trade, you knew you wanted some sign of aggression. Now, like I said, I think it's a lot harder of a trade to take, but when you get better at identifying like what trades are high odds and what trades are medium odds, what you're going to see here, the other thing that makes this really quite good is that all of the sellers that were active, look how far away they are. They're way up here, right? These guys are far away. I can risk 15 points to the low, and I can get 15 points back to that most recent aggressive seller. And even if the market rolls over, I've now got a free look. If I took 2 contracts with 15 points, and then one of them I sell for a 15-point gain, and I hold the other one, I'm risk-free on that other trade. Like, yes, it could roll back on me and I get 0, but isn't that a great opportunity if you think that this bigger picture might actually be bullish? That we're at support, you have an opportunity to buy for very cheap, and you're going to get a free look beyond 15 points if you can just get a good enough risk reward. Here you had it. And so they called that in the room, and most everybody got a piece of this. I wish I would have held runners. I didn't. And like I said, I did not have the confidence that I should have for this trade because I had taken the earlier one. I had taken this divergent one. I took this one and didn't get paid because I wanted 30 points. And so I was already down in the day, and I was like, yeah, I just want my money back. You know what I mean? That's how I was thinking about it. But anyway, we did bounce. If you didn't take the trade and you weren't sure if it was still bearish, once you start getting sell signals that are not respected, and instead they just say like F you sell signal, I'm going higher, you know something has changed. Plus, look, we got a sweep, right? It went from oversold to overbought on the VZO. Clear sign of a phase change. So if it was really bearish, it's probably balanced or bullish now. And then again, since we had purple, we could usually say, okay, go back to wherever you had established support, and we should expect sellers to show up there. So where's established support? In this case, I'd say it is the high. We didn't really establish, I'm sorry, not support, resistance. We didn't really establish any resistance here. I guess maybe it's this, but I'd say it's probably the high. So let's see, does this one act as resistance or not? No. Yeah, I'm not surprised. Same. So I made that mistake on the way up, and I can adjust that. So rather than rethinking every time you get a purple area of where established support is recently, it may need to be back where it was when they started turning purple. That's fine. That's an easy adjustment. So this just squeezes up like crazy. on PMI, which, not a huge surprise. And look, we get another pink, right? So established support, where is it? Well, here it's actually all the way down here. That's established support. If we test under it, we probably want to be a buyer. If it has aggression back to the upside, we got plus sign followed by purple bar. That's usually a sell, but it's bullish. So do you really want to sell when it's that bullish? Like it's usually not a great idea. It actually gives you something today, but it doesn't usually work very well. And you get purple bar, green bar. This one has a ring. It's even better. Now again, we ran into the same problem here as we did here. It's a single pullback with quite a bit of volume, and you can look at VZO on the smaller time frame is just not loving it. It does not look very strong. And this one is very similar. See how here we're trying to trap this guy, but we just can't get any volume? Look at that. There's just no volume on the upside, right? It's all sell volume coming off of here. Now, this one's still dominant on the higher time frame, but that doesn't really come into play until the support. So you can say it's bullish, but I'm not going to buy here. I'm going to wait for a bigger pullback. And so this one, at least you got a little bit more extension. And then you get purple bar star on the bottom on the smaller time frame, and purple bar green bar. And then I've got the ring there to let me know that we're trying to shift momentum and volume. And then look at VZO, looks more healthy. It's breaking out. It's not getting stuck at the zero line. And this one actually is already in the middle section, not oversold anymore. It looks like it wants to go higher. Then plus sign followed by purple bar, followed by pink bar is usually a pretty good buy if it's bullish. And so that one worked pretty nice. Then we get another. So here's another purple reversal. But there's no, I'll go here, so I didn't take it. It ended up working really well. And then here's the range expansion signal on a 2-bar combo. That's a really nice one. And then this was a trap back in. So this one. See that? So that trap back in is really, really good. Because it worked here. They traded under them, and bulls shifted volume up again. You might as well buy it again. You've got plus sign pink bar for a late add. And you make back whatever stop you took earlier, more if you do it right. Notice you've got divergence at the high, so be very careful if we trade under this. So we can move this guy down here. That needs to hold more or less on this move. Plus pink, go higher. We get pink in the background. Now we have to think about established support. Like I said, maybe we leave it where it was, but I would say this is established support. So I'll put a green here, and let's see if that's wrong. And then I won't move it from there. So pulls back, tests back through the pink bars. They trap a star, and now higher. So see how this star down got trapped? No trap back in, but we got above the star down. And they can run. We get a divergent. Oh, no, it's not divergent. We didn't make a higher high, so just a lower high. Looks kind of weak all of a sudden. We put in another pink bar. We immediately get under it. That's not a good sign. We're probably going back to support. Oh, we're not. We're just going to chop around for a while. Okay. Nothing really to do there. We can keep our eye on established dominance. And you can see here, buyers had dominance here. But then we chop, drop. And they got dominance. Sellers got dominance right there. Right? And then if you look here, sellers have dominance on this time frame too. Right? Oh, maybe they don't. Because they broke this one. Buyers broke that one. And then did they not make it over this dash? They didn't. So sellers never got dominance on the 24 tick. Okay, we come back to established support and we trap back in. That's usually a good buy. Yeah. So that one works. Good. That's my thought. And then we get a higher low right at the same spot. And maybe to the other one. Do we get here? No, we don't. So I'm not totally sure how to get this one, to be honest. Purple bar, green bar on the small time frame, but back here it didn't look very. That doesn't look very good. Oh, but we held the zero line here. That's kind of cool. Are the buyers dominant? They are. I'd say they are. Interesting. Okay, but we're underneath support, so I don't really know how to take that trade. I'm not good at that. When we get under support, but they retake it, I'm not totally great at that trade. It's great. It works wonderfully, but I'm not confident about it. It doesn't look strong when it shows up. It's like, wow, we had support here. We just got under it. They're trying to take it back, but it didn't quite make it. Oh, I guess it did drop back in. Maybe it's okay. It's not divergent, is it? Is this divergent? No. Yeah, I don't know. Maybe it looked better on ES. And then it just starts getting choppy. This stuff is really hard to trade. If you see it start doing this, like, just wait. Like, if you want to be a seller, just sell it up here. If you want to be a buyer, just buy it down here. Don't mess around. If you start seeing this consolidation, don't even mess with it. Don't trade the breakout. I wouldn't even touch this. There. So there's our... Oh, it didn't reach it, did it? It didn't reach our established support. It probably reached this one. That's too bad. Oops, too far. Yeah, it dropped into the higher one. That's disappointing. We did get the pink bar. And then we got divergence at the low. That's pretty strong. So I'd say that one's probably good. Yeah. So yeah, again, both of those were not perfect, but they were more bullish than bearish. The opportunity was there. You just had to be willing to be a little bit flexible with like where you're going to draw the line. Interesting. Okay, so we get pink up here. So now I'd put my established support here and say if we get under that and retest it or retake it, I'd want to be a buyer. If they can't hold that, I want to be a seller. I really don't want them to just straight go there. That's usually not a good sign. So you want to see them at least try to save it before that. I'm not usually, that's got divergence on it. I might end up buying this, but only if we have established volume, and I'd say we don't. So I'd probably miss this one. Do they trap back into it? They do. They trade under it. See, this had divergence. They trade under it, and they trap back in. That's almost always a good trade. Oh, did this one have a plus? Never mind. No, it didn't work. Because when it has a plus a pink bar, you can just, I call it the dynamite trade. You can just buy the breakout there. So that's earnings. That's earnings. Okay. So pink, so it's obviously strong. Established support, I'd say, is probably here. So this is my sweet spot where as long as buyers kind of hold that or defend it, I can keep being bullish on a higher time frame. But what I don't want to see is I don't want to see this first pink bar here. I don't want to see this taken easily. So this shaded area should at least get defended when they pull back. Okay, they can't even get there. There. So they get there. Oh, it turned purple. So it's already warned you that it's probably not going to hold because it's turned purple with the yellow. It's saying the exact opposite, that it was bullish with momentum, now it's bearish with momentum. So where's established resistance? Here. Right? We couldn't come back and break that. So if the market gets back up here and squeezes through those stops, it's probably going to roll over and drop again on the first try. But really, if it's bearish, this should hold. And it does. Interesting. So purple, 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 purple. There's really no attempt by buyers. Oh, that's what's happening right now. There's no attempt by buyers to try to save this. Wow, was there more news? This is I didn't even realize this was going on. Damn, I can't believe I got rid of those puts. So this is happening right now, and there's not a lot to do because we're now this is that established support from before. See that? That's this, and that's where we are. So if this wasn't a huge impulse move and instead we made our way down here slowly, I'd say you could probably buy this. But when it's an impulse move like this with like massive moves, like a huge move down here, and there's no sellers to trap, I won't even touch it. I would much rather wait for the pullback and then reject. So unless there's questions, I don't want to really make this any longer. I just kind of wanted to go over some of those ideas about how to determine whether or not we are looking bullish or bearish, and then when that changes, and then how to get aggressive and how to be conservative, looking at the same chart with like two different ideas or two different gears. So no questions. I will see you guys next time then. This is, again, my contact info. You can reach me at Twitter at RedBenTrader, Or else, if you want to learn more about algorithmic trading and systematic process that we use in the trading room I trade in, you can email my coach, Simon, trade, the letter N, word perform, @gmail.com. Good luck, guys. Trade your plan, and